Eric Muad with Mother.com. It is June 26, 2015. Markets up about 100 points on the Dow. We see that the Nasdaq is unchanged or slightly down. S&P 500 is slightly to the upside. I think this is a very tricky spot in the market, and I'll show you why. So there's a chance here people are going to be making a mistake one way or the other, because right here I think the market is going to decide which way it wants to go based on what I'm looking at, and I'll show you some of the things we can use to gauge what the direction could be. So okay, we got the pullback we've been expecting, not a big surprise, but I think now the question is what next. If we take a look at the hourly for the Nasdaq, we see that the market has come back to this line connecting recent RSI lows, and I think that's something that could indicate a bounce. And so we begin by taking a look at the reasons why the market could bounce. So that's one, the support there looks good enough, and also this line connecting recent bounce areas as far as the Nasdaq hourly is concerned. So right here, if the market can hold this line, one can expect, so if this line can hold, one can expect there to be a bounce starting around here. If we take a look at the Dow hourly, so we see that the Dow hourly, after yesterday's pullback, did come and find support on this line on the hourly, which is where the market has been bouncing. So that's good. So there's another reason why the market could actually bounce based on the hourly support there. If we take a look at the Dow 30-minute chart, as of right now, we see that the line where we're expecting support based on the lows, so draw a line connecting the lows like that, and it connects the most recent RSI lows. You see that the market did recapture back above that line and also holding above where it has been bouncing. So those two lines are holding the market somewhere around here. If you're looking for a reason to get back in the market, that's a good reason. We take a look at the Dow transports. Let's take a look at the Dow itself on the daily. So let me take a look at a fresh Dow daily chart, because I think this is going to be key for today. Is right now the market did close after Thursday's trading below 50. If the market can move back above 50 today, expect a big up day. So that's very key. Watch the daily RSI. If the market moves above 50, it's going to be a strong day into the close. Otherwise, if the market cannot move above 50, and I think at the highs of the day it was above 50, that indicates the market is losing momentum, and we've probably seen the highs for the day. So not to confuse you. So if the RSI moves above 50 for today, expect a big close to the upside. Now that it is back below 50, there could be some indication of losing strength, but watch that 50 level. The same thing can be said on the S&P 500. As of right now, it is back below 50. It was above 50 earlier at the highs of the day. If it moves and closes above 50, expect a big up day in the market today. Otherwise, the failure to reclaim 50 for today suggests that the market has seen the highs for the day. So above 50, strong day. Failure to close above 50, not a good sign of strength short term. If we take a look at the Dow Transports daily, we see that the daily is coming back and showing very good support on the Dow Transports. So if you're looking for a reason why the market could bounce, here it is. The line connecting recent RSI lows seems to be holding. Double bottom there, and now we are back on that level. Also happens to be an area where market has been finding support over the last 1-2 years. As you can see, even some of the areas where the market had steep drops, support there on the line with uniform activity below the line, back above it, which gave us that support level, and on and on and on. So this is where, if the market was going to bounce, it is showing support exactly where it needs to on line number 1 of potential support, and also line number 2 of potential support. It is important to note here that we should watch this, because if we eventually end up breaking below those two lines, that's going to be a bearish and an extremely bearish situation for the market. Take a look at the Dow Transports hourly, and on the hourly, just right now looks like this is where it's trying to make a stand, connecting recent lows on the Dow transports. If this can hold, the market could have a chance of stabilizing after this major drop on the Dow transports going back to November of last year. You can see it's been making lower lows. So if we break that support line here, that's another indication of a market that wants to go down. Also, on the hourly, you can see that the lows line, or the line connecting lows, is holding the market for now. So the Dow transports are showing signs of support, and all the market needs to do is have a strong day, and this is going to be confirmation that the market has stabilized around here. Let's take a look at one more reason why the market could bounce, because like I said, this is a tricky spot. Market could decide to take either. If you take a look at the S&P 500 hourly, two lines of support connecting recent RSI lows like that, and this lows line goes back to March. It connects nicely with all these lows, and now coming close there and holding. Also, the line connecting recent lows on the hourly seems to be where the market is bouncing exactly right there. So that being the case, the indication here is that the hourly chart is telling us the market is due for a bounce. Just one quick observation, those of you who are on my site, there's a chart here that we've been tracking. This is a 5-minute chart for the S&P 500. If it breaks above this line of resistance, any movement above that is going to be confirmation that yes, this market is primed for a strong move today. So a breakout there is exactly what the bulls want to see, and if it takes place, the indication would be that the market wants to move higher. So we watch that for short-term indication of where the market wants to go. All right, so I've shared with you the reasons why the market could move higher. Let's take a look at the reasons why the market could stall. We go to the weekly for the Nasdaq. As you can see, the weekly for the Nasdaq, yes, it made all-time intraday highs this week, but the weekly is back to this level of resistance. This line has been resistance going back to early 2014 every time the market moves higher. So we are seeing this week that this is showing resistance. If that's the case, indication there is that week to week the market could pull back. If we take a look also at the S&P 500 weekly, as of right now, the line connecting the tops on the weekly RSI are coming into play, as you can see right now, showing resistance. Indication there again is that the market is primed to move lower week to week. If we take a look at the Dow Transports weekly, we see that there's another reason why we could be bearish here, or at least be looking for this market to crack, and it's because the Dow Transports are threatening to break this support line, which is the recent weekly closing low, and the level to watch there, and it is trading below that, is 8,299.75. anything below that would suggest a fresh weekly closing low. Keep in mind we have this bearish crossover between the 13-week moving average, so we have this crossover already taking place, which is bearish, between the 13-week moving average, which is undercutting the 34-week moving average, and sometimes this can lead to a major sell-off. So we keep watching that. If we trade below 8299.75, that's bearish. If the market can hold above this level, then that's bullish. Also, we've been watching the IYR. It's another area in the market here that is showing potential to break down if it stays below this weekly closing low recently, and the weekly closing low there to watch is at 73.48. So anything below that could suggest that this market is threatening to go low. And keep in mind we had another instant of a bullish crossover here beginning of 2014, and the market went higher, and again that was between the 13-week moving average and the 34-week moving average. Now we look at the exact opposite, which could indicate that the odds are now starting to look like they want to break this market. So let's watch that 73.48 level. Anything below that is not good. So if we continue trading below that level, this would be indicating that more than likely the market could break. So yes, that's why I say you can find reasons to be bullish, reasons to be bearish. Gotta be careful here. I don't see a problem in waiting for a couple of days for the market to decide which way it wants to go. If you miss the turnaround, if the market is going to bounce, if you miss that by a day or two, no big deal. But if you get it wrong because you're rushing to get ideas, then really there's no need for you to be doing that. So I think here I would be playing wait and see which way the market wants to go. But then again, this is a little bit of a problem here. The fact that the 10-week moving average and the 13-week moving average are crossing over, that's a problem. Yet we can see that if, for example, if we take a look at the Dow hourly, it has already shown us potential to find support. And for the day, which is Friday, let me just finish with this because it makes sense. For today, if the market can move the daily RSI above 50 on the Dow, expect a big up day. And that is also true for the S&P 500. If the S&P 500 can also move its daily RSI above 50, expect a big up day. Otherwise, I would expect there to be a strong pullback if the Dow and the S&P 500 cannot move their daily RSIs above 50. So yes, confusing, but the market is, in my opinion, in an inflection point. It either finds support and bounces, or it breaks support short term and we see it cascade even lower. Eric Muadh with Muadh.com. Be cautious. Wait for the market to decide where it wants to go before we get aggressively short or long. Peace and blessings. I am out. Woo!